Okay. Hi everyone.
Hi.
Hi everyone. This is Jack Wong. Welcome to our Advanced Stocks and Options Trading class, ASTC 2014. This is batch number 2, and I welcomed all the new students on board. And of course, I have old students coming back. And obviously, I want to grow the family. And as a result, I hope that this discussion, this learning together will help each other. My mission is a very straightforward one. As long as you learn, you are okay, you make money in the market, I'm happy with that. Okay, so let me go to my screen. You will not see me most of the time. Instead, I'm going through the slides. Now, the slides are very much similar to first batch. So I want to make some changes to the way I'm teaching this round because you guys will have the slide. So instead of going through the slides, I have quite a lot of interesting instant applications. So I'm going to show you how to do it in this webinar. If you have time, go back to the slide in your own time. I think that will help us to get out of this place by 10 o'clock too. Because they will remember our first session, we actually drag on to like 2 hours and 15 to 2 hours and 30 minutes. Okay, so let's go through the standard thing here. Hello. When I want to go through standard thing, my PowerPoint slides can you please not hang it? Yes, that's right. Okay, the legal disclaimer. Okay, I'm going to let you see it because it is a private classroom. I'm not so particular with that. Just understand that what we are sharing is all paper trade. Yes, you can invest in real money. I won't stop you. But if you lose money, don't come after me, okay? Because I will also do my own best to help you, but I cannot control how much you lose. All right. So with that, let's go through briefly the course outline for these 5 weeks, 5 Monday nights. Starting off with tonight, we are going through the fundamental and technical analysis in 15 minutes a day. Now, this is what we call ultimate game plan. Of course, when you first started, it won't be 15. Now, let me not shortchange you by saying that, well, does it mean that I have to spend more than an hour? No, I actually spend less than that. In fact, last 3 months, I won't stop you. I actually spent less than 15 minutes, really. So I was able to do it. I believe you can. So tonight is very similar, a very simple one. I'm going through the fundamentals and technical. That serves the basis for us to go through session number 2 because session 1 is more on stock trading, so we are not touching any options. But session number 2, we will start talking about options. And I do have some new ideas coming up. Not very new, but just that is reflection of the current market condition. Session number 3 will go through straddles and strangles technique. I want to show you how we trade before earnings, during earnings, and after earnings. It will be very interesting, especially after we finish this batch. In less than a month's time, we will have the earning announcement for quarter 3. Then session number 4 is trading calendar spreads and butterfly spread. The market has been quite sideways recently, so it might be a good time to look at this. However, well, let's see what the market is doing. I don't want to overpromise you guys because I don't know what the market is doing anyway. So finally, session 5, I foresee based on my session by batch number 1 experience, if anything that cannot be covered in session 4, because session 4 is very heavy, I will set aside some time for session 5 to handle that. But I'll wrap it up and talk about how I approach this business in terms of money management, in terms of strategy choice, and finally putting everything together. 3 steps in trading. Well, this is very obvious because we always said in all sorts of trading, we have got step 1, which is to identify trading opportunities. I don't force myself to trade every night, which is true, because trading heavily or trading in terms of quantity can actually increase the chance of losing money. So I'm very mindful with that. Secondly is once I identify the trading opportunity, I ask, okay, what's the entry? How do I get into the trade? But finally, I believe it's the more important step, that is how do I manage the trade? How do you manage the trade? How do you get out of the trade? Because you can say anything you want to get in. You can find tons of reasons to get out. So I always, like my good friend says, practice defensive trading. Okay, many people actually ask the question, what if I'm right, how much can I make? I mean, this is what the 95% club is always asking. And in my opinion, the correct question is, what if I'm wrong, how much is my risk? I always focus on the risk. How much am I able to afford to lose? It is a bit strange, but essentially that's the way I have been trained by my mentor. And he's very right, because I have not had any experience of having my account bust. I have friends whose accounts who have blown away the accounts a few times. I have never had that experience. That is why risk control is so important. 3 components that I consider essential for this professional trading business. One is the strategies. Second one is the mindset. Third one is money management. Typically, many people ask, so which component is the most important one? And you'll be surprised that majority of the people said to me, strategies. They need to learn all sorts of strategies so that they will make the most money out of the market. But I would say that the optimal state is actually to have 3 things together. That to me is the optimal stage. In other words, if you have strategy but no good mindset or poor money management skill, you can still lose money. Having a positive mindset, which I'm going to do it in session 5, plus the money management part in session 5, would help a lot of people from becoming an average trader to a better trader. I'm always of the opinion that mindset, money management are far more important than strategies. Most of my students will agree with that. So let's start with step number 1, which is to identify trading opportunities. And here I would like to go through some of the ways for the purpose of this class. And I am not going to say anything about the performance of the system. I have students who told me that the system worked very well. I have also myself very extremely fabulous results in Q1. This few months can be a bit challenging, yet we have a very nice trade. So the system, even though may not be in the best stage, we still make money using that. So that is what I see in my account. So let me introduce the concept of fundamental analysis combining with technical analysis that will form the theme of this course. And essentially, once you have signed up or once you are in this community, you will always hear us talk about fundamental analysis, which is kind of very strange, but it was. So let's look at the objective rules here, the rules that can be expressed in black and white. So we are not talking about discretionary trading, which says, okay, I feel like doing this, I think it will be that. Every single thing that we talk about, especially in the fundamental analysis, are expressed in black and white. So let's look at the rules. The rules are very interesting because our foundation is looking at Investor Business Daily, IBD 50. Now, if you do not have the subscription of that, it will cost US $28 a month. But I can tell you it worth every dime because IBD 50 has served me very well. So I'm very happy with the subscription. But in this few weeks, because you are with me, you have access to my spreadsheet. And by the way, I forgot to remove the spreadsheets, which means that you can still see my analysis even after the course. I will tell you where to find it. But let me go through the concept, then I will work out with you how I fill up the spreadsheet. So hopefully you will be able to see what I do. So the starting point is looking at IBD 50. So I download the spreadsheet every week, typically Saturday night, if not Sunday. That is my time schedule. My job at the end is to grade the stocks. There are 50 altogether. I'll grade them as A stock, B stock, C stock, and F stock. I'll place it on watch list, wait for technical analysis, which talks about the timing of entry. And then once the entry is filled, manage the trade and exit with either profit or loss. Okay, so let's look at the fundamental analysis, and we are building a BOB list. BOB means best of the best. How do we do this? Now the slides are detailing the rules, but I propose to go through the spreadsheet directly with you so that you are able to see. If you are confused, replay this video, and right now we are at 20:44, which means we have passed 40 minutes, and you may want to really go through the PowerPoint slides again while I'm showing you how to do it, and I think that is a lot faster. So let me remove this PowerPoint slide first, and also the spreadsheet. I want to go through this IB50. So every week I will be able to download this list because I'm a subscriber. So this list is the list on 25th May, Sunday, 7:23 a.m. because I thought I downloaded the spreadsheet on Sunday night. I did it last night actually. So how does it work? First of all, there are 50 stocks, and my job is to sort out the trade by a few criteria. Number one, I don't need all this information. So if I were to blow this up so that you can see it clearly, now you will see that I've got EPS, blah 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 blah. I don't need all this. Okay, my objective is to focus on the EPS column and the RS rating column. So I only need these two columns. So what I do is that I will delete the column from M to X. So just delete the columns. That's it. So now the spreadsheet is down to only a handful. And by the way, from IBD 50 rank all the way to the composite rating, I also do need. So I'll just delete these columns as well. So now I've got 4 columns. The third step is very straightforward. My objective is to identify stocks with EPS rating 90 and above, and RS rating, relative strength rating 90 and above. So long as both numbers are 90 and above, I'm in. So how do I speed up the process? I just shade the whole boxes, shade the whole box, data, sort. Okay, it doesn't matter how you do it. The first thing would be to sort let's say I sort the EPS rating from largest to smallest. So once I've done this, you will then see EPS rating is sorted nicely. So I'm going through the list. Anything that is below 90 will be gone. So Myored Genetics is the first one. So anything below that are gone. So now the list is shortened a lot. So I do the same sorting again. This time round, I'm going through the RS rating. It doesn't matter which one you start first. In any case, it will work. Okay, so RS rating from largest to smallest. Okay, so now I focus on the RS rating. And anything that is below 90 are gone. So IBD 50 list right now has approximately from row 8 to 40, so probably 33 stocks. Now I would not want the company name as well, so I may as well delete the company name column. So I only have 3 columns here. The final sorting is just to make sure that I have got the alphabetical order sorted out nicely. Well, this step is not necessary. I'm a perfectionist, so I have this step also. So the last step is just to sort out the symbol in A to Z. Boom, that's it. So now I've got a very nice list. Now, so this step, if you have been working on very efficiently, that should take less than 2 minutes. Okay, because I have to explain, so it takes a little bit more time. Now, with that, I'm going to copy and paste the list. Now, I'm going to copy this list somewhere. So where do I put it? Now, on the Facebook group, which you have been given access, there is a link. I will show you where to find the link. The link will help you to locate a spreadsheet file which looks like this. Okay, so my job every week is to create an R spreadsheet, another page that gives me somewhere to paste the information from the BOB list. Now, I'm not saying that the BOB list is complete because we still need some more sorting. So let me talk about the rules. And by the way, I have already gotten the main copy already. So you can see that the result is from ABG all the way to www that have been pasted. So I need to simply come to this place, Control V or Command V, it depends on whether you're using Apple or PC. So you just paste it, then I'm okay. So once we have got columns A, B, C, okay, information ready, then the rest are the analysis. So let me explain how it works. So the first dot is ABG. Okay, so I need to go to finance, yahoo.com. Okay, so this is the place. So let me do a very slow way. Okay, finance, yahoo.com. Now the US site because we are trading US stock. Okay, so what I need to type ABG, the stock ticker symbol, and then I'll be directed to this. Let me blow this up so that you can see where I'm going. So this place I'm going is called analyst estimate. Okay. So what I need to do now is to focus on a couple of things. All right. So the first thing is I want the average estimate to be at least 3 cents. 3 cents. So it's 0.03. So the average estimate is $4.59. So of course it will be satisfied. So what I did is just I typed the word OK. I may want to just increase the zoom in the spreadsheet so that you can see better. So I'm doing this so that you are able to see better. Okay. Now ABG, right? Once again, I've got. Let me pull this out. Where is it? Okay, here. So 3 cents above. This is $4.59. So okay. So okay. Okay means I'll go to the next step. Next step is the average analyst. What I need is 3 and above. No more, no less. 3 and above. So let's look at analyst. Usually I look at the next year columns. Okay, this is me. 10. So I just type 10. So this is more than 3, or this is more than 2 rather, because 3 and above. So okay. So the next one is the earnings surprise. So earnings surprise will need to be at the earnings history. Now earning history, I purposely need the latest 2 quarters. The latest 2 quarters. So one we have got 7.3, one we have got 19.8. The criterion for this is I must have at least 0%. I must have at least 0%. So I have a positive 7, I have a positive 20, so I say okay. The fourth one requires me to go down to the EPS trend. Again, the last 2 quarters, okay, so 3.97. Now is 4.12. So essentially, I need the current estimate to be more than what the number is 90 days ago. So 4.12 versus 397. Okay. At the same time, I need the next year, current year, next year. I need the number to 90 days ago, which is 4.4. Compared with 4.59, the current estimate is larger than 90 days ago. So in this case, you can see 4.12 is more than 3.97. 4.59 is more than 4.4. So in other words, what I do is I'll just indicate up, up, up means is more than. That's me. Okay, I've been using the word up. So UP, and therefore it's okay. The next criterion is to look at the EPS growth estimate. And how do we look at this? We just look at the stock itself because it is compared with industry sector and S&P 500. So our focus is just ABG, the stocks column. My job is to look at next year. I need 20% and above. Next 5 years, I need 20% and above. If I cannot have this, I just write down the number and fail the stock. So the rule is very rigid. Once I see the word F, done, I move on to another stock. So the process can be fast. Like in AFOP case, the ones I see only 2 analysts, which is below 3, out, F, straight away. So the process does not require you to complete everything. As long as you see the F, you move on to the next stock. So now let me move on to one stock which I have gone through everything, the whole process. So let me show you the whole process here. This is SAVE. There's a stock called SAVE, S-A-V-E, which allows me to go through the whole steps. Okay, so for SAVE, how do I go about this? Well, of course, type SAVE. SAVE is spirit S, by the way. It's not SAVE. It's just the ticker symbol. Okay, so I go to SAVE, and let me do this one more time to go through the whole process. First of all, you need to go to this. Okay, and I need the average estimate to be about 3 cents. So obviously, no problem. Second thing is I need the analyst to be about 3, no problem. Okay, you see 12, you see 11, no problem. I typically take this number, 11. The third one is earnings surprises to be at least 0%. So this is positive, this is positive. So both positive, okay. If you see one negative, straight away out. No need to ask. The good thing about this system is that once you see one criterion fail, move on to the next stock. Don't even need to ask. Okay, so now next thing is the 90 days ago compared with current estimate. I need the current estimate to be more than 90 days ago. So 295, 290, check. 374, 361, check. So okay, this stock passed this criterion. The fifth one is the growth estimate, which I need to have the next year about 20% and above. So check. And next 5 years 20% and above. Also check. So now for SAVE, I'm coming to a point whereby everything is okay. So there are 2 more things I have to do. Actually, the first thing is simple because I just need to look at the PEG ratio or PEG ratio, which stands for price earning growth ratio. I need this number to be, let me show you the criteria. The criterion is this. The number is 0.06. This is how it works. If the number is 1 or below, we give a grading of A. If the number is above 1 but not more than 1.5, we give a B. If the PEG ratio is above 1.5 but not more than 2, we give a C. So for this stock, say because the PEG ratio is 0.76, we give an A stock. Okay, we give a grade A for these stocks. Okay, so that's for the time being. That is what we need for this place also. Because the next one that we go to is key statistics. We need to look at one ratio called ROE, which stands for return on equity. Key estimate, you will scroll down, and sooner or later, under the management effectiveness, financial highlights, okay, you will see the ROE. The criterion here is 15% and above. So SAVE is above that. So what I do, I just jot down 25.85. Now, the stock is now classified as passed and is an A stock. When I say passed, it simply means that it has satisfied every criterion. How many stocks do we have that are satisfied all these criterion? Last week, out of the IBD 50 list, we only have AKRX 1, which satisfy everything, which is a B stock. Then we have got SAFE, which has satisfied everything, A stock. We have THRM, which I'll come to this later because there is an adjustment required. But URI passed every criteria, so therefore it is a grade A pass stock. So at least we have got URI, we have got SAVE, we also have a stock called AKRX. These are all the what we call the these are all the stock that has passed the criteria and is grade A or grade B stocks. Okay, so in the meantime, let me see what's happening. Nothing happened. Okay, so then the next thing that I'm looking at is how do I reconcile THRM? Because for THRM, there is a challenge. Because the challenge is this. The next year growth rate is only 15%. Okay, it's 15. So I said, well, if it's not 20%, we'll fail the stock. For growth estimates, we give the stock a second chance, and probably this is what we call this is the exception rule only for growth estimate. So how it works is this. I am going to, first of all, THRM. I want to show you how it works. So take a symbol THRM. And I'm going back to the analyst estimates. Now you will see that for analyst estimate, the growth we have got next year only 15.2. Okay, so there is a problem. It's not 20 and above. So what do I do is I'm coming back to these earnings surprises, 24%, 62.1%. This is what I'm going to do. I'm going to take an average of 24 and 62.1%. Average as in, add these two numbers together, divided by 2, I've got 43.05%. 43.05%. So what do I need to do is, I'm going to make an adjustment to this 15.2%. I'm going to adjust it by 143.05%. 143.05. So essentially, it is 100% plus the average, and that's it. So now, by going through this adjustment, what I've got is a very interesting thing. 15% times 1.4305 is 22%. So after the adjustment, it passed. So it's okay. Now, the PEG ratio for THRM is 0.76. Let me just double check whether this is the case, because if you go down, I see 0.76. Okay, so I see 0.76. Then, strictly speaking, that should be a grade A stock. But because these have been subject to an exceptional adjustment, I will downgrade the stock because of that. So this has been consistently applied so that you know, even though the PEG ratio is below 1, I'm going to adjust or downgrade the stock simply because of this earnings surprise adjustment. So as a result, as of last week, we have got URI, we have got SAVE, we have got AKRX, and also THRM, 2 grade A, 2 grade B stocks. So the whole exercise as of now, 9 o'clock, what I have shown you is I've got a very clear idea of what stocks I'm looking at. So the stocks are just 4. So now I'm going back to this place as to where you can see the spreadsheet. So allow me to show you where you can find the spreadsheet. So this is the place. This is the place. This is the Facebook group which we have accessed. What I need you to do is you go to the file section. If you just scroll down all the way, you will have access to this spreadsheet. So the spreadsheet is actually here, and I have decided I'm too lazy, I will leave it there. So if you want to just have a taste of my working, if you rely on my working, I won't guarantee any. If I make mistake, sorry, I'm not going to disclaim. I will disclaim myself because I can make mistake. David has pointed a few mistakes of me earlier on. I mean, in the early part of the process. Right now it's okay because I have been doing this for a while. So this spreadsheet link will allow you to come to this spreadsheet, which I have shared with all of my students. I do make a best attempt of doing this every week. So now people ask, how do I know the stock performance, or what are the qualifying stock, or as of True 24? If I click the tab, I will be able to tell you. Some people ask, how do I know? Because I've been tracking this for the last 4 months. So I do have every single detail for back testing purposes. And as I'm continue going through all these ASTC classes, now I have a very clear idea of doing back testing for you guys, because I can tell what are the stocks that qualified. So for 224, as you can see, I have SAFE, I have Chihu, I have PCLN, I have MTW, I have EDU. So you can see that then in February are passed. But since last month, my stock list has been very miserable. It is like only 3 stocks, 4 stocks, like that. And like 428, I've got MTW, I've got URI, I've got, I think that is it. So 50 stocks are considered the best of the best. And guess what? I only look at 2, 3, or in one case, I may be looking at 8. But at one time, I have not encountered any case of looking at more than 10. So that's the beautiful thing about this system. So now let me go back to the slides, because I want to make sure that you understand where I'm coming. So now these slides are essentially documenting what I've just said. Okay? So go through the list yourself. If you need to refer to the slides and watch the recording again, I'm happy to explain. At the same time, I have got some more videos in the file session, which are supplementary videos for this session only, because I feel that you need you need to see more things. So I'm doing additional videos for that purpose. Okay, so these are all the criteria. And now I'm moving on to the next session called technical analysis. Now, I will do 2 things here. I'll explain what they are. Then I will tell you my take, because I personally like channel breakout more than trend analysis. This is my own personal taste. But in any case, let me show you how it works. For channel breakout, we look at a buy. We learn, first of all, as I first started learning this system, I only know how to buy. Later, you will notice that can you do the system as a sell? You can. But the market has not shown any sign of being bearish yet. So that's the reason why we have been talking about buy, 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 buy. Now, these are the rules. The rules are simply put, require actually 3 lines to look at. One is called a 55-day high. This is for a buy system. So I will place a buy stop at the 55-day high plus 10 cents. So I have a buffer on that. And for a high price stock, which is defined as stock at stop price more than 100 typically, then I add 50 cents. Did I say 100? No, it should be 200, not 100, 200. 200 high price stock, 50 cents. And I need ADX, which is the average directional index, to go up, and I use 14 period. And at the same time, the value of 55-day high remains the same or has been lower for the last 5 consecutive days. If ADX is down, forget the setup. If ADX is flat, which is quite unlikely, then we'll wait for ADX to turn back. So let me explain in English in terms of the chart how it works. So I'm going to show you a chart which is using this thing called Pro Real-Time Trader. Let me just wait. Give me a second. Let me open up the system. I hope that it's working, because if it's not, then I have to exit the system and come back again. Because don't know why. Pro Real-Time Trader is not working now. What happened? Okay, so let's see. Okay, Pro Real-Time Trader works. So let me move the chart over. Now again, in the video session of Facebook group, I explained you can use Pro Real-Time Trader as a free software, and this will give you something called a buy. What I call the template. I show you how to key in the template, how to plug in the template. Now what you see is that a 55-day line, which is in blue, 20 days low. I forgot to mention 20 days low, which is the stop loss. This should be the next line. But for the buy setup, what I need to look for is the blue line and also ADX. ADX is just a very nice one line. It doesn't tell you whether the stock is bullish or bearish. It just tells you that the trend is strong. So what I'm looking for is a setup. So let's say I'm looking at URI. So my criteria for looking at URI is because I know URI is on my BOB list. So what do I do is to go to URI. So hold on, I need to find the place to key in the stock. Where is it? Where is the thing? Today is very chaotic because I've got the things ready for you, but somehow last minute is not there. Am I opening up too many files? Probably. So let me just close down some of the files. Hopefully that would help me not to eat up the space. So let me close some of the file first. That may make sense. Okay, so I've closed down once. So let me see one more. Let me check it one more time. The spreadsheet is done, so I'm closing it off. Second, and then Pro Real-Time Trader. Okay, so let's see whether Pro Real-Time Trader will work this time. Okay, so now I want to key in a stock. Where is the stock? Okay. Where is the square box? Cannot find it suddenly. Cannot find the square box. This is very embarrassing because I'm supposed to know where to find the square box, but now it disappeared. Haha. So allow me a second. Let me find the square box because I need to key in the information. That is very embarrassing. Where is the thing? I tell you what, to be very, very safe, I'm going to exit Pro Real-Time Trader and I'll come back again. Okay, so while I'm doing the reboot, I'm happy to exit first, and I'm coming back shortly. So let me go through the slides again. So while I'm doing this, let me clean up all these places, because you know I'm opening a lot of files for the Hangout, which is not supposed to be. That's why there could be some technical hiccup if the file is too big. Okay, so now, okay, so let me wait for Pro Real-Time Trader to reboot. While I'm talking about this system, so you'll see that now I'm going through the next slides. The next slide is about the stop loss. The stop loss is essentially 20-day low. So it's a 55-day high, 20-day low setup, whereby for the low, I will set a stop loss order 10 cents below or 50 cents below. How many shares do I want to buy? Of course, that depends on a formula. The formula is what we call a risk per share, also a risk limit divided by risk per share. And how it works is you need to think about how much you want to risk in a trade. Suppose you have got a $100,000 portfolio, your 1% risk will be $1,000. Okay, so your risk limit will be 1% of your portfolio. So typically in this class, I will use 100,000 as a start. And some of you will find that, wow, $100,000, I don't have so much money in the account. How do I do it? So that is why in session 2, I will introduce the concept of options so that you are still able to participate in the trade, yet you can use options to lower your risk. Okay, so it is doable. But for this purpose, let's assume that it is 100,000. So 1% of that will be $1,000. So your $1,000, you're going to be to divide the number by this thing called risk per share. Risk per share essentially is your entry price minus your stop loss. So that is called the risk per share. So your $1,000 divided by the risk per share, you would then be able to determine how many shares you can buy for that position. Okay, so my pro real-time trader is up again. Okay, so now I can move this over. So let me do this for a very short, do this very quickly. Okay, so it's there again. Haha. Okay. So the interesting thing about Pro Real-Time Trader is it's free of charge. So I want to look at URI as an example because URI has been a very nice example either for current or backtest. Now you will see that for my purpose, if you use the indicator that I have loaded on the Facebook group, do not open the indicator file. There are step-by-step process for you to do this. Of course, if you don't use your own software, you can do this. You can do the same. So I'm not stopping you from using other software, by the way. So it's just that for our purpose, I use Pro Real-Time Trader for consistency. So you can see that for channel breakout, let's say I'm going back to sometimes February. So at this time, you will see that on Jan 24, okay, on Jan 24, if I blow up the chart a little bit, you will see that Jan 24. Okay, so Jan 20, you see Jan 24. Okay, Jan 24 may not be a good example, but never mind. I choose to do it, so let's so be it. Because on Jan 24, this is a situation. I just pick a day. So let me just explain the setup. You have missed the boat. Okay, you have missed the boat because what you are looking for is a stock that is going up, which you believe is up. So that's the reason why we need the BOB list and filter out a lot of the noises. And at the end, we got those really the best of the best stocks. URI is one. So in this case, you will see on Jan 24, you basically have no setup because the first thing that you see is the ADX. So long as ADX is zero, or sorry, ADX is negative, which is expressed in red color, there's no channel breakout at all. Channel breakout only happens when the ADX line is in blue, or in other software, ADX is going up. So this period, I don't need to see URI, or because URI has been very nicely read. So my next opportunity will happen, or actually has happened, sometimes in March. So let me just go back to the stock charts, and you'll see why it is the case. So coming back in March, you begin to see that ADX now is going in what we call blue color. Blue color means that ADX is going up. Okay, so what I want to see is this. I want to see the stop price to go up, and I will set a buy stop order at 55-day high plus, in this case, 10 cents. So the 55-day high is $85.60. So the entry price will be 85.7. 85.7. But hang on for a minute. The slide also said that I need the 55-day of the past 5 days to be either down or flat. Flat means that this is the 55-day high flat. This is the case of a flat line. This is called sloping up. So I either can accept a sloping down or a 55-day flat. So as a result, even though I may seem to have a setup because the previous day's 55-day high is sloping up, that is out. I cannot have this opportunity. So I have to just wait. Although the stock is going up, 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 I have no choice. I have to wait. Let's come to this particular point. Now at this point, you see the ADX is red, so no trade. So now I move to this day. Now ADX is blue. Okay, so I will be placing an order at 91.03 plus 10 cents. Okay, supposedly. But I look at the 55-day high of the previous day, same thing, it is sloping up. So I cannot put the trade. Even though I have ADX perfect, I have now a potential buy order. The 55-day high, which is sloping up, prevent me from entering into the trade. So even though I've got a very nice stock, which is wanting me to get in, because of all this very rigid rule, I cannot go in. So when would be the best time for me to get in? Well, I actually have to wait till this day. This day, as you can see, the ADX is hang on, it's not this day. I have to wait for this day. But you can see that even though that was last Friday's number, okay, now ADX finally is in blue. Okay, at the same time, I've got a very nice breakout, but the ADX of the 55-day high of the previous day is actually sloping up again. So the rule is so strict, I cannot get in. So when was the time when we all got in? The time that we got in was somewhere around here, if I'm not wrong. Yeah, the time that I got in was somewhere here. Okay, somewhere along here. Let me recall the case. So this 55-day high was 69.41. So I'm waiting for a price to go. I'm setting a buy stop at 69.51. So on this day, after the close of the market, I placed an order 69.51. The next day I was in. Now the difference is this: if you look at this date, the ADX is blue, up. The past 5 days, 1, 2, 3, 4, 5, the line is flat. Nice. 69.51. Then I will set a stop loss at 62.01 minus 10 cents, or 61.91. So the risk per share is around $9.50. So how many shares can you buy using $1,000? $9.50, so I can buy approximately 105 shares. Now in options, we say we can buy one contract. So that is why sometimes options makes a lot of sense. So with that, what I did was I then go in, the order went in, and what I do is this: I'll just hold the stop until the stop hits. Okay, the stop loss is this: until the stop hits this red line, minus 10 cents. Why? Because this 20-day low, I will adjust it along the way. So this stop loss 20-day low is a moving stop loss, is a trailing stop. So as the stop price is going up, this red line might also go up. So each day what I need to do is I look at the stop, I look at the 20-day low, and I adjust it accordingly. So it's just like a very simple process. If you have only 4 positions, adjusting the stop loss is very easy. Okay, so you're not trading big. You're not trading a lot of stocks, I mean. So what you have got is a stock that is going up from 69.51, going up, and the 20-day line also going up. So when do you get out? So 69.51, you don't see the stock hitting the stop loss until sometimes here, until Feb 3rd of Feb. Then you ask, oh, but after so long, you mean I only make $5? That is why the other rule kicks in. The other rule has something to do with the ADX. So ADX rule says this. So just now we talk about the stock 69.51. We're waiting for stock going up, going up, going up, going up, and stock has not yet hit the 20-day low. What do? I'm monitoring the ADX line. And the ADX line, there is a rule which I will call this bishop. If I can find this line to type the word bishop. We call this bishop because my mentor talked about it, give me the name bishop. Bishop rule says if ADX, when I'm in a position already, and ADX has surpassed 40 level, so the stop loss will not be 20-day low. Instead, I'm waiting for ADX to go back to downside. So in other words, I will wait for ADX to go up, and when it surpassed 40 level, the stop loss will be whenever I see the drop in ADX, I will be out. So 69.51 with this bishop stop loss, and the stop loss happens to be like 73. Well, the bishop helped me to secure $4 profit in a couple of, how long again? 69 point this, and bishop is about a month's time. So a month's time, $4 move on a $69 stock. That is to me a very decent move. If you use options, the ROI can be even better. Okay, so that's the whole idea of channel breakout. How about we look at another stock? Let's say we look at Safe. Safe is also a very nice stock to look at. So let me open up the chart for Safe. For Safe, this stock has been on our BOB list for very, very long time. So just recently, what happened is that the stock has made a very nice what we call the channel breakout. Now this is what we call a very nice classic channel breakout, because what happened is that the stock has gone down, make a nice move up. Okay, so on this day, ADX is up. So what I do is that I look at 51.95. 51.95 plus 10 cents, that is the buy order. So next day I'm in. Next day I'm in. And what happened is that the stock just skyrocketed until when? Until I see ADX has surpassed 40. Okay, once ADX surpassed 40, I'll look at the bishop. Okay, so on this day, the bishop came out. So we should be able to get out at around $59. When we get in, there was 51. In a month's time, the stock has gone up by $7 to $8. So one move like this, that month is very nice already. So I don't need to really trade every month vigorously, continuously for such opportunity. So right now, Safe, I'm waiting for Safe to give me another opportunity for a channel breakout. It will still take some time. But the thing is that you see ADX is dropping. So therefore, there's no channel breakout trading signals. So without channel breakout trading signal, then what do? Here comes the second setup. The second setup will be something called a trend analysis. Okay, so trend analysis is a second system that we are looking at tonight. As I'm watching the clock, it's good because we finish everything we should be able to finish everything on schedule. But trend analysis is a bit tough to explain because it says you place a buy stop order at the most recent 3-bar high plus 10 cents in a bull market or pennant formation. What does it mean? Bull market means when you see 2 higher highs and 2 higher lows. Pennant is a triangular formation, 2 lower highs and 2 higher lows. Then you place your stop loss as the most recent 3-bar low minus 10 cents or 50 cents. Now, a lot of people confuse between CB, channel breakout, and trend analysis TA. Because for TA, there's no mention of ADX. ADX is not deployed in this system. This system is purely a swing trading system. If you see a swing, you get in. If you don't see a swing, do nothing. So let me give you a stock which qualifies for this move quite a while ago. As I was teaching batch number 1, I'm also using this as an example, simply because swing trading analysis does not come often. So now I'm going to change the template to TA swing, so which will look like this. Hold on for a minute. Okay, it will look like this. Okay, so this is the template for swing trading. So you don't see a 55-day high and a 20-day low. Okay, you don't see that. So essentially for swing trading, what you're looking for is I am waiting for 3-bar high. So for example, I've got a 3-bar high. I've got a 3-bar high somewhere. So I need to scroll quite far back, because for PCLN, the price line group, for swing for TA swing to happen, I need to find a good example to explain the concept. Well, of course, it's not very easy to find nowadays, because the stock market is either quiet or breakout, so trend is not there. It's very hard to identify any swing trading or TA swing trade, so it's kind of tough to look for such opportunity. But anyway, let me do this for you. So okay, so that might be a good one. So the concept is this. So you wait for a swing high. So for swing high, swing low, this template gives you the swing high and swing low. How it works is that if you see a triangle up, that's a swing high. If you see a triangle down, that is a swing low. A swing high, simply put, is out of 3 bars, the middle bar is the highest high of the 3. So that you can see is a swing high. But because it needs the 3rd bar to confirm that, so that triangle will only happen when the 3rd bar is completed. So let's say this bar 1, bar 2, bar 3, that is a swing high. So we'll mark it a swing high. So what do I do is I am going to put a mark here. So that is a high. The high may be just a bit small, so let me increase the size a little bit. Okay, so that is a high. So when there is a high, I need a low. So let's say I come back to this point and found the low. So what I need to do is I am going to copy the text, and I'm going to configure it. I want it to be a low. So this software you can actually copy and paste. So there's a low, there's a high. So next I've seen a low. So that's good. I've seen a low. So that is a low. So copy text, move it. Oh, copy again and move it. So that is another low. And I'm looking for a high. Okay, so there's a high. So copy high. But this high is not higher than the previous high. So what do I call this high? This is a lower high. Lower high. So then I'm waiting for another low. Okay, so low. So there's a low. Okay, so next one, there is a high here. It may not be a very nice setup, but anyway, I've been doing this, so no choice. So I'm plotting the highs and the lows until I see something, until I see that, okay, I've got a high, then I've got a high, and I've got a low, and I've got a high. So this is quite vigorous, because you really have to wait for things to happen. And in other words, you're waiting for high and low. There's the high again, and then there's a low. So the process requires you to mark all this. Okay, finally we have got something. Now you then look at all these highs and lows. What I need is 2 higher highs, 2 higher lows. I'm done. 2 higher highs, 2 higher lows. So here is a bit he's a bit messy. So I've got a low, I've got a high. So what I need is 1 high high, 1 higher low, 1 high high, 1 higher low. So once I've seen a higher low, I'm done. So I'm waiting for a buy of the previous high, and when I'm in, I'll be setting a stop loss at the swing low minus 10 cents. So essentially, the system requires me to wait for another swing high, swing low to get in. So the rule is this: I'm waiting for low high, low high, but this is not a high high, so fail. So I've been waiting. So there's a low, there's a high, good, starting. Then I have a higher low, good. I have a higher high, good. So I have got first high, first higher low. So I wait. So there's a high, so second high, but I have not seen the low. So I've been waiting until this point. I finally got a low. So I've got 2 higher highs and 2 higher lows. Done. Then I'm waiting for the stock to make a turnaround. So the turnaround is looking at the high, the previous swing high, plus 10 cents. And the price of that will be, let me see, 1196.59 plus 10, in this case because it's PCLN, so 1137.09 because we add 50 cents. So what happened is that there might be a potential in here, 1198. So we are in. So we are in on this. So we'll set a stop loss based on this swing low. So unfortunately, on this day we are stop out. So TA gives you it can give you a very nice setup if it happens. It does take a lot of time to wait for this, especially in the last few months. My experience is that the market has been is not trending, so TA system is very hard to come by. So what I did was I have created 2 videos on TA and CB based on very nice market conditions so that you will see the setup, so that you understand the exact mechanics. The whole point about TB and CA is that TA by nature, if it comes very often. CB doesn't come often, but when it comes, it can be super powerful. So you can scroll the chart here, noticing that as of now, PCLN is in a downtrend. So there's actually no system. There's actually no TA swing system to get in. That is unfortunately because of the market condition. Okay, so what do I do next is I want to talk about another stock. So I just because we still have time, so I want to show you as many stocks as possible so that you can have a taste. You can have a taste of the system. So let me go through another stock, which is MT or Qihu. Qihu is a very nice one. This is my biggest winner of the year so far. It has not broken my record yet. Okay, so Qihu, if you look at the swing high, swing low, I can tell you we do have a very nice setup. So let's see. Let me mark the test here. Where is my price bar? Okay, I need the price bar to be here because I need to mark the low. Okay, there's a low here. So let me make it large, low. Then there is a high. So I'll change it to high. Okay, so now we are moving based on this. We have a high here. So that is slightly higher. Slightly high is also can. Then we have a low. So low is here. Okay, so we have a higher high and higher low. So then we see another high. Good. There's a higher high. So I need a higher low. So let's see. There's a low here. Unfortunately, guess what? This low is lower than the previous low. So no chance. So we failed it. So I have to wait for another two higher highs and higher lows. So let me do this again. So then there is a high, there is a low. Okay. So let me see. There is a high. Do I have a low? Yes. So now, if this is the high, there's a one high, higher high, two higher high. Okay. So then the low, I've got a higher low, higher low. So then I have got a nice TA swing. So the TA swing allows me to get in. So my swing will be based on what? Will be based on the swing high, which is this one, not this one, because we are looking at the second high. Second high, which is 95.68 plus 10 cents. 95.68 plus 10 cents. So the low is here. Okay, so the stop loss is pretty high, 13 bucks. So you need to think about how many shares you will need to get in. But guess what? In a few days, we were in. So when we are in, this is the stop loss. So we make the move. We have not been stopped out because that is a stop loss. So when we have another swing low form, what do? Is we'll move our stop loss from the previous swing low to the latest swing low so that we can keep our profits if we have. So we are entering at this point. So we are literally moving the stop loss. But guess what? Guess what happened is that although we make some money, we lost some money, the stock finally, boom, make an all-time high. So at that juncture, you will notice that I will be quietly moving the swing low like this. So when the stock is trading somewhere here, my stop loss is already here. So no matter what, I would not lose any money. And later, I found another swing low, which is here. So guess what? So in the end, if the stop loss happens somewhere here, so we enter at 95 something, we actually exited at 108. So we talk about like how many points? 13 points. 13 points. So that opportunity, if you ride on it, and if there is a trend, this is a very powerful TA. Of course, you may ask, can I use CB to get in? Well, you bet. So let me give you a CB analysis of this stock as well. Okay, so hold on. CB. Can I use CB to get in? Well, you bet, of course. For CB, same thing. First of all, do I have any CB signals? So this one is a bit tricky because this one I believe is an earning announcement. So if you were to place an order before earning announcement, you've got to think twice. So I would not recommend. But if you are at this juncture, guess what happened is that you will see a high of, this is what, is it correct stock or not in the first place? This is QIQ, right? Because the stock price is so much. I may be having a wrong stock price, a wrong stock. So let me come back to Qihoo, and I want to turn on a F1, which is, what stock is that? Why do I have a very interesting one? Did I come with a correct stock name? Okay, so this is the one. Okay, that makes sense. This is the one. Okay, so this is what Qihoo 360 is. So let me say it again. So Qihoo 360, you see a majority of the period, the stock has not given us anything, right? But down here, the stock has given me a blue ADX, The stop price entry will be 92.64. Okay, 92.64 plus 10 cents, so 92.74. So next day I was in. Now, if I only look at the setup now on this date, then I cannot go in. So because the 55-day high was sloping up. But if I'm looking at this point, then obviously the last few days, the 55-day high is either flat or sloping down. That is what I mean by sloping down or flat, not going up. So if I'm looking at this as the setup bar, I can go in the next day. So one day makes a whole lot of difference. So now I'm in. So the 20 days would be my stop loss. You can see the stop didn't touch it at all. Didn't touch it at all. Okay, didn't touch it at all. So at this point, 124, you see my stop loss has been moved up and up and up and up and up and up until the stop touch here. So interestingly, the stop, because there's no B sharp signal, so unfortunately, I could only get out somewhere here. I have to admit it's not very nice because I return so much profit to the market. ADS does not give me a B sharp, so this is like, okay, the market gives you what you have. No choice. So in this case, CB may not be a good, but it may not be a good result, may not generate good result. I have to say that because of the setup. Well, we just have to follow the rules. Okay, so you will notice that both TA and CB has quite a lot of interesting thing, and most students will find that, well, this is the first time you're looking at this, and of course, you know what, this is not easy to understand. So in order to be good at that, you do need to practice by looking at the chart quite regularly. So let me go back to the Facebook group first. Okay, so I want to go back to the Facebook group, which is this one. See, to you, I have no secret already. You see my Facebook account essentially. So here I want to go to the file session. Okay, the file session, not files, but file sessions. What I want you to do, what I want to show you are a couple of things so that you know where to get all these resources. Okay, first of all, the spreadsheet link is here. So this is how you access to my Google spreadsheet just now. This is the fundamental analysis on the BOB, because this is the one that says, okay, how do I look at the filters? I have gone through the filters via PowerPoint slides. If you cannot open the PowerPoint slides, or for some reason you don't want to open this is the place. Because once you click it, the rules are all here. So it's kind of very convenient if you like. Okay, so I'll leave this to you here. Okay, so come back to the file session. You will then see what else. You will see a technical analysis method 1, technical analysis method 2, which is the CB and TA. And guess what? These are the rules. So same thing. If you don't want the PowerPoint read up, you can get this as the written rule on Facebook group. So it's again all there. Okay, so now I've got something else. This is the TA swing. This is the price channel ITF. So what you need to do is to go to this place called Pro Real Time Trader. Now this is the place, PROREATIME ProRealTime.com. So I need you to experience it. How do you do this? You go to ProRealTimeTrader.com. There are free versions, there are paid versions. Do not go to the paid versions. It's not Pro Real Time software. What I need you to do is you register an account and you just simply launch version 10.1. Then you will get what I have. Okay, so when you get what I have, what you don't have is these two files. These two files that I mentioned just now, the ITF files, they are for the Pro Real Time Trader. How do you add your indicators? Look at these documents. It is all stated there. So there are screenshots, there are instructions telling you how to add these two indicators on PRT, which stands for Pro Real-Time Trader. So I've done the explanation for. So I don't need another videos because I've already done this in last round. I've got back testing examples on channel breakout long and trend analysis long. Okay, I've got these two. Reason why? Because I want to show you the videos. So there are videos for the trend analysis. There are also two videos I have for the channel breakout. So these are all the resources you can have in this course, which you have access to my Facebook group. So go for it. And finally, I have got the ASTC sessions 1 to 5 of last round. So if you are looking at this, no worries, you have actually got your version, which is your batch number, choose one. However, if you can't wait, you want to do self-study, the previous sessions are all there. But I'm going to change some of these because I want to give you what the market currently is doing. Okay, so I want to make sure that you are given the latest contents. These are the older ones. The principles remain the same, but the examples will be different because we are now into May. Okay, so let me come back to the slides. Couple of questions that I would like you to consider. Which charting software should you use? Broker's platform for sure. If you are using Options Express, Think or Swim, no worries. In this place, I'm open to anything you do. It's just that for me, I'm going to show you Pro Real-Time Trader. Okay? Why is there no profit target? My mentor said, if you limit yourself to a profit target, you will limit your profit. These two systems have been tested for many years by my mentor, and essentially my mentor makes tons of money without any profit target. His only concern is stop loss. So when you practice so well about the two systems, I will give you the advanced stuff. There is an advanced version which I usually do not give until you are very good at the basic version. Once you're ready, let me know. I will show you the advanced version. Do we scale out our position? No, we don't scale out. In fact, the funny thing is that the advanced version says we scale in, not scale out. Scale out, we either exit all the position when we are stopping out, or we will add some more position there. Is it really simple 15 minutes a day? Yes. Yes. It's really not 15 minutes a day. 15 minutes a day is essentially to move our stop loss, to look at new setup. Based on the stock that we have identified using BOB. BOB is done once a week. So 15 minutes a day is really the time spent the time that you need to spend. You may be surprised, but trust me, I can live by my own testimonial on this. Can CB and TA be applicable to bear market? I have not tested out for stock because I have no experience. Market has still been like tomorrow, we might be looking at SPX all-time high. So where's the bear market? So I cannot tell you this. Can CB and TA be applicable to other trading instruments such as Forex? You bet. It is possible. As a Forex trader, the only question I have for you is the market has not been trending. So if you have CB and TA, you can lose quite a lot of money. As my true paper trading account shows, CB is not doing well. TA, forget it. Because the market is not trending in the Forex this year. So it's a bit strange. So I would say that practice these two systems using the equity market first. Can you apply this to Singapore market, Australian market, Hong Kong market? You bet, it is possible. So you can apply the same rules, except for other markets, I may not have a BOB list for you. The BOB list, the US stocks have a lot of US fundamental data, so getting the BOB list for US stocks is not an issue. I can't speak for other countries. Okay, so with that, I think let's do some practices. What I want you to do for session number 1, simple. Go back to rewatch this recording. Post some of your questions on the Facebook group. I do have students from batch 1 who will be able to answer you. Let's grow the community together. At the same time, tap on the spreadsheet I have, which I've shown you where to find it. Look at all the BOB stocks in the past few months and identify whether you are able to spot all these CB and TA. Ask any questions. Nothing is stupid, okay? So I think that's all I have for this week, and I will see you in section number 2. Okay, so I'll keep it short and sweet. I was so happy that I'm able to finish everything within my 1.5 hours time. And I'm going to wait for this recording to be posted to YouTube. I'll upload to the class page for all of you. Okay, so enjoy this session, have fun trading, and I'll see you in session number 2. This is Jack Wong. I'm signing off now. Bye-bye.